A few months ago, in my discovery call with a new prospect who has just moved back to India from US, the first question he asked me was not about investment. It was, I just sold my US stocks. How much tax do I owe in India? I paused and asked, when did you sell? Silence. In that silence, I knew either I'm going to help him to save a lot of money or confirm that he has just lost. If you're planning to move back to India or you have already moved, this situation is far common than you think. Most people assume once I have moved back to India, all my incomes becomes taxable. And that assumption alone costs you lakhs, sometimes crore, for no reasons. Because here is one thing which nobody explains you. The moment you come back to India, the law actually gives you a window, a transition phase, but you have to know how to use it. When you return to India, you don't instantly become fully taxable on your global income. There is a phase called as RNOR, resident but not ordinary resident. And during this phase, certain foreign income is not taxed in India. This includes your capital gains from US stocks. Yes, completely legal. But here's the catch. You have to align it properly with the US tax rules. And this is a place where most of the people get confused. Just think of it like you're managing two clocks. Clock 1, India. Depending on your past residential status or number of days you have spent in India, you may qualify as RNOR up to 2 financial years after you return. And during this period, India does not tax your foreign income as long as you have earned outside India. So if you sell US stocks during this window, India does not tax those gains. That's clock 1. Clock 2, US. Once you permanently leave and break the US tax residency, you become what called as NRA, non-resident alien. And for listed US stocks, US generally does not charge capital gains for non-residents. So now imagine this. When both clocks aligns, India is not taxing you, US is also not taxing you. This overlap becomes your reset window. That is the time when you clean up, that is the time when you sell. But here is something very important here. You have to inform your US broker that you have left US. And that is done through W-8BEN form. Without it, your broker may still consider you as US tax resident and withhold tax. With it, the status is updated properly. Small form, big difference. And just to be clear, it's not about avoiding tax. It's about not paying tax where law clearly says you don't have to. If you are returning to India and you are unsure about your timing, don't guess. These are the transitions where small mistakes make big difference. At AKM, we help NRIs to structure this properly. The RNOR calculator link is below. Start there. I'm Kashish from AKM. Keep your money simple. See you in our next talk.